Hello everyone, welcome to Options with Doug, streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure. All Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Jug chat channel that's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X, formerly known as Twitter. My name there is @Pless. Here are the key tenets to my approach for trading. This is the basis of my approach for trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures, and certainly in the large cap tech stocks that I follow and trade, like the Magnificent Seven stocks, as well as equity index futures like the S&P 500 and the NASDAQ 100. And for the S&P 500, SPX is the underlying index. SPY is the ETF version of that index, and the futures contract ES is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for the NASDAQ 100, NDX is the underlying index. QQQ is the much more liquid ETF version of that index, and the NQ futures contract is a derivative of NDX. And just like the S&P 500 for the NASDAQ 100, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Jug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups. And when I talk about setups today, I will be focusing on an underlying asset. Setups in that asset can be taken any number of ways, depending on the asset. That could be futures contracts, shares of stock, or options. Questions and comments are welcome, and I will be watching both the Options-Jug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. Hello, Stephen. Welcome. Glad you're here. Hello, Robert. Welcome. Glad you're here as well. And hello, everyone else. Welcome. Glad you're here as well. Here's my agenda for today, Friday, June 21st. First of all, I want to go over news items, economic data, and events for today to wrap up the week. Then I'll go through my positional analysis. Then I'll review some setups from earlier today. And then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know, and I'll be glad to do that. All right, let's start with news items. So the big news item in my world is the options expiration today. Let's take a look at that. It is an end of quarter. This is the monthly options expiration that occurs every quarter. And these options expirations are typically much larger than the other monthly options expirations. This is the expiration concentration chart. This is available in Spotgamma to Spotgamma subscribers. This chart is showing expiration concentration for the S&P 500, NASDAQ 100, and the Russell 2000. The vertical axis is showing delta notional at each expiration. And the expiration on the left is today, that is the June 21st. The big monthly options expiration that occurs every quarter. And the orange bars are showing, this is market maker's position, call delta notional, positive delta notional. Blue bar is showing put delta notional or negative delta notional. And you can see this is a very heavily call-dominated options expiration. And remember, in a call-dominated environment market makers have to trade against price to hedge their delta exposure, and that tends to subdue or decrease volatility and support markets. And Spotgamma today is estimating that about 1/3 of the S&P 500 gamma is expiring today. Could lead to a little bit of weakness or consolidation. They were thinking starting after the Wednesday holiday into expiration, and then next week as well. So we'll see, and certainly in single stocks that began yesterday, especially NVIDIA. We'll take a look at NVIDIA in just a few minutes. All right, so big call-dominated options expiration, looking for 1/3 of the S&P 500 gamma to expire today, leading to a little bit more volatility. The gamma should drop pretty substantially next week. We'll see. So we'll talk about that on Monday. All right, so that wraps up the news. Now let's move on to positional analysis. All right, so I'm going to start with the S&P 500. This is the ES Futures and Bookmap, trading at a very narrow range today. Gamma notional is quite positive today, typically leading to trading range, mean reverting price action. That's certainly what is going on today. All right, so again, this is ES Futures and Bookmap. And let's take a look at a higher time frame. I'm going to go to the underlying index, SPX. We've all seen this chart before. One-day chart. This is Thinkorswim showing a one-day chart for SPX. Rally began last year, October 30th, 5-month rally. Correction began April 1st this year. Then the rally resumed the Monday after a slightly put-dominated options expiration. That was April expiration. So the Monday after that April expiration, the rally resumed. All right, let's pick this up now with a 1-hour chart. This is the 30-day 1-hour chart. Little bit of weakness began yesterday. A rejection at the 5,500 call wall. We'll take a closer look at that in just a minute. So rejection again yesterday at the 5,500 call wall. All right, let's take a look at the other levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market, based on the closing price for SPX from last Friday. Those levels remain in place for the entire week. And note that SPX did test the upper weekly expected move yesterday and now is trading down below the upper weekly expected move. The dashed blue lines are showing the lower and upper daily expected move. Also based on the options market, based on the closing price for SPX from yesterday. I do post those levels in Discord every day the day before. All right, so SPX trading within both ranges. All right, the dark red lines on this chart are Spotgamma levels. These are based on gamma-weighted open interest. They're provided to Spotgamma subscribers on a variety of trading platforms. This is Thinkorswim. Let's take a look at the key daily levels. First of all, here's the put wall at 5,300. That's a strike with the largest net negative gamma that can be expected to act as support. The next level up is the volatility trigger at 54.45. That is Spotgamma's proprietary volatility flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. Above that level, like SPX is trading now, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. That tends to subdue or decrease volatility, leading to more mean reverting price action, more range days rather than large trend days. And that is exactly what is happening today. All right, just above that is the absolute gamma strike at 54.50. And that is the strike with the largest absolute positive and negative gamma. That's where most of the gamma-weighted open interest is concentrated. Note that level did move down from yesterday, and the volatility trigger actually moved up from yesterday. Absolute gamma strike moved down, and volatility trigger moved higher, and the call roll remains at 5,500. That's the strike with the largest net positive gamma that can be expected to act as resistance. And again, it did its job yesterday, acting as resistance. All right, let's wrap up our view of SPX with a 1-minute chart. This is a 1-minute chart. We'll take a look at this in just a minute. Note this is the upper daily expected move for today. That was not yesterday. All right, so yesterday, this reversal was actually at the SPY 550 call wall, right around the SPY 550 call wall. And then this is the SPX 5500 call wall. So SPX rejected at both the SPY 550 and the SPX 5500 call wall yesterday, and now trading in a very narrow range today. All right, let's just take a quick look at SPY on a 1-minute chart. Here's that rejection yesterday, just after the open at the 550 call wall. All right, let's go to Bookmap now. So in Bookmap, I have my own cloud notes, so I can show SPX levels. Here, this is the 54.50. That's the absolute gamma strike, also noted as support in the Spotgamma AM Founders Note. And around that level, just the SPY 543 level, just above that, acted as support this morning. So I have SPX levels. Again, there's the 54.50 level. I also have SPY levels. Here's the SPY 545 volatility trigger. Also this 54.62 level. That was noted as support in the Spotgamma AM Founders Note. Now it looks like the S&P 500 is breaking below that level. You can see the magenta volume dots. A lot of aggressive sellers coming in now. You can also see that in the falling cumulative volume delta. All right, so narrow trading range. Looks like the S&P 500 may be heading down toward the low of the cash session. All right, note there is a difference in price between ES and SPX. And I'm using the September contract now, so that offset has widened out quite a bit. Right now it's somewhere between 67 and 68, and I'm using 68. So I'm showing the SPX 5450 level at ES 5518. And that offset will narrow as the next expiration, the next rollover approaches. All right, let's move on. Let's take shifts and levels. I mentioned SPX, volatility trigger higher, absolute gamma strike lower. And then for SPY, there was a bullish hat trick. The volatility trigger put wall and absolute gamma strike all moved higher. All right, let's move on to NASDAQ. And I'm going to take a look at the underlying index charts. I'm going to start with QQQ. So the only spot gamma level in play for today is the 0 gamma level, and that's also the absolute gamma strike at 480. And really no clear support and resistance. QQQ trading at a range somewhere just below 479 and 482. Let's take a look at IndexX. And it looks like this IndexX 19,800, that's a large gamma 2 level, acted as a resistance earlier today. And now price is back to the 0 gamma level that is very close to the QQQ 480 absolute gamma strike and 0 gamma level. And that is IndexX 702, 19,702. All right, let's go to Bookmap. So just like the ES, I have my own cloud notes. So I can show QQQ levels. Here's this 19,800 level, IndexX, acting as resistance. And now NQ is back down to the 0 gamma levels. So here's the range again, 479 up to the 19,800 large gamma 2 level. All right, so that's NASDAQ. We'll talk about setups in just a couple of minutes. So for NDX, the volatility trigger shifted higher. And for QQQ, the volatility trigger also shifted higher. So all volatility triggers shifted higher for SPX, SPY, NDX, and QQQ. And for QQQ, the put wall shifted higher and the call wall shifted lower. So the call wall is just above at 485. All right, let's wrap up positional analysis by taking a look at gamma notional for today. Let's see how market makers were positioned on the gamma curve at the beginning of the day. And this will give us an idea of the volatility and trading range, the type of trading that we can expect for the day. So I like to take a look at gamma notional here for the S&P 500 and NASDAQ. Note all these numbers are positive, and they're quite positive for the S&P 500. For SPX, that's 1.298 billion, and for SPY, 1.439 billion. Those numbers did shift higher from yesterday, and for the NASDAQ, these numbers, although still positive, did shift lower than yesterday. So just slightly positive for NASDAQ. Note also that Brent, the founder of Spotgamma, likes to take a look at this Spotgamma Gamma Index. This is for SPX, and the theoretical upper limit for this is about 4. So this is about as high as it gets in terms of positive gamma. And again, looking for this to reduce next week And we'll take a look at this Monday as the gamma expires with this expiration. All right, so based on this, looking for trading range today, mean reverting price action. All right, let's move on from positional analysis now. All right, so I'm going to move on to execution now. The information that we've looked at so far, other than the book map, is based on static data. The levels, the gamma notional, that's all updated once a day. They do change. That's why I track the changes every day. Now, again, let's move on to execution. Look at real-time hedging flow here. So we'll start by taking a look at what options traders have been doing today. Let me check for questions. Ancient the Architect, welcome, glad you're here. Asks, do you consider implied volatility when trading options? Yes, I do, absolutely. Yeah, that's one of the key considerations when trading options. You know, of course, you want to buy low volatility and sell higher implied volatility. All right, so let's move on to execution now. Let's take a look at what options traders are doing today. So I'm going to start by taking a look at what options traders have been doing in the S&P 500 today. So this is the HIRO signal, HIRO, Hedging Impact Real-Time Options. This is available to Spotgamma subscribers. All right, so this is, again, the S&P 500 HIRO signal. What this chart is showing is options trades and market maker hedging activity in real time for a combined signal of SPX, SPY, XSP, and ES futures. There are two HIRO signals that we can use for the S&P 500. This is the first. This is the index signal. What this chart is showing, there are two lines on this chart. First, the white line is the price of SPX, and the purple line is the HIRO signal. A rising HIRO signal indicates traders are taking positive delta options positions. They're buying calls and or selling puts. And a falling HIRO signal indicates they're taking negative delta options positions. They are buying puts and or selling calls. And you can see there's a very close correlation between options trades and market maker hedging activity and price today. And that is the index signal. Now let's take a look at the other signal. This is the S&P equity signal. This is another combined signal showing options trades and market maker hedging activity for a combined signal of all S&P 500 stocks. And this is also showing a very strong correlation between options trades, market maker hedging activity, and price action. And this is kind of unusual. I have not seen this strong correlation between these two signals in quite a while. Usually this signal, the equity signal, is a little bit smoother, and the index signal is a little bit more up and down, a little bit more volatile, but both very close to price action today. Also note the total notional value is extremely small. Normally for the S&P 500, this is up in the billions. You know, could be up, 5, 6, 7 billion on the high side. All right, so that's the S&P equity signal. Go back to the index signal. Notional value also very small. So let's just stick with this signal. That's delta notional value. All right, so let's zoom in on this chart. And let's just take a look at one setup. Right around 9:55, you can see the shift in the HIRO signal. and starts to shift up. Again, right, maybe before 9:55, and price starts to move higher. All right, let's go take a look at Bookmap. Go back to the S&P 500. Zoom in. Here's the reversal higher. Right around somewhere, I guess right around 9:55, something like that. So let's take a look at the order flow in Bookmap. First of all, the volume dots are showing market buy minus sell. I'm going to darken up the heat map just a little bit. All right, so volume dots showing market buy minus sell. Magenta dots show more sellers than buyers. Green volume dots show more buyers than sellers. So price reverses right above these two levels, the SPY 543 and the SPX 5450 level, noted as support in the Spotgamma AM Founders Note. Aggressive buyers start to come in as traders start taking positive delta positions, and price grinds higher in a very positive gamma move higher. Slow grind, a lot of pullbacks, consolidation. Up to around the 545 volatility trigger. And there were some limit buy orders down here right at ES 5520, helping to support that move higher. So those were limit buy orders that's shown by the heat map and the Bookmap in Bookmap. All right, so that was the long entry this morning. Price did eventually move up above the 545 level. Now let's go back to Hero. So the Hero signal started to flatten out. Chopping up and down, and then right around 1220 started to move lower. All right, let's check the equity signal now. And now it becomes a little bit more clear. You can see what I'm talking about with the more volatile signal here with the index, more up and down, and this signal, the equity signal, a little bit smoother. And signaling this top right here. That's right around 1206. And remember that. Actually, let's take a look at that now. So let's go to and I'll explain this signal in just a minute. This is what I use for NASDAQ. So this is the Magnificent 7 signal. 1206, peak in the Hero signal. Now let's take a look at NVIDIA. 1206, peak in the Hero signal. So NDX, NVIDIA still driving the bus. At least it appears from an options point of view. Or let's go back to the equity signal. Again, this reversal just afternoon, much more clear by taking a look at the equity signal. And let's go back to Bookmap. $12.06. There's the high of the day so far. S&P 500 turns lower as the S&P equities, Mag 7, and NVIDIA Hero signals all start to move lower right at the same time. And you can see now that here in the subchart, cumulative volume delta, that's the magenta line starting to fall. Then as price moves lower, Sell stop orders help to fuel that move lower. That's shown by the falling yellow line, also the on-chart indicator. Now it looks like some large traders are coming in and fading this move with iceberg orders. That's shown by this blue line in the subchart. Also, you can see these are not large numbers, but large traders are coming in with iceberg orders they use to hide their size. Remember, the S&P 500 is a very positive gamma, so I'm looking for more mean reverting price action today rather than strong trends. All right, let's move on to NASDAQ. NQ futures and Bookmap. Let's go back to the hero signal, see what options traders are doing. All right, so just like the S&P 500, let me zoom out of this chart. There's an index signal, and this is the signal that combines options trades and market maker hedging activity for NDX and QQQ. All right, this right here is some sort of rebalance, options expiration rebalance, some sort of fund or ETF rebalancing. Very algorithmic grind higher in the hero signal. I believe that's probably NDX. Yeah, that's NDX. There it is. All right, so that is influencing the combined signal. So we'll have to zoom in to get more clarity in the morning. All right, so we'll zoom in on this chart. And before that, that move by NDX, there was a very strong correlation between the index signal and the Mag 7 signal that we'll take a look at in just a minute. All right, so let's go on. Let's take a look at the Mag 7 signal, and then we'll zoom in. All right, so that is the index signal for NASDAQ, and here's the equity signal. This is the combined signal here, options trades and market maker hedging activity for a combined signal of the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. All right, now let's go back to NASDAQ, zoom in, and I'm going to have to zoom in before 11:30 to eliminate that beginning of the move with NDX. So what this chart is showing, again, long entry right around 9:55. Note in this case, there was a slight lead in the hero signal for the index, NASDAQ index. We'll move on to the Mag 7 signal, and very similar, kind of a simultaneous move higher, or maybe a slight lead. The hero signal started to move higher, and maybe just a minute later, this is price for QQQ started to move higher. All right, so let's go back to Bookmap. Pretty sharp V reversal here in NQ futures. Aggressive sellers on the way down, shown by the magenta volume dots. They become exhausted. Aggressive buyers come in. Traders are taking positive delta positions. Price moves higher. And here's the reversal right at the NDX 19,800 level as traders start taking negative delta options positions in Nvidia and the Mag 7 stocks in general. All right, so that is the S&P 500 and the NASDAQ. Again, very strong correlation in options trades, market maker hedging activity, and price action for both the S&P 500 and the NASDAQ. All right, let's take a look at some stocks. All right, the first stock I want to take a look at is ARM. Actually, let's go back to the Mag 7, and I'm going to shift to puts and calls so I can take a look at puts and calls separately. And this does reveal more information, and this is showing that call buyers have really been driving price action. Rising orange line indicates traders are buying calls. When traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. This is the S&P equity signal. Again, you can see the very strong correlation between the call line, the orange line, and the put line, the blue line. So starting 1206, traders started selling calls, resumed buying puts. That's shown by the falling blue line. Orange line, blue line moving in the same direction, and that is a very powerful directional indicator. When both lines move in the same direction, it's very likely that the underlying will move in the same direction as well. So again, right now in the S&P equities, traders are net selling calls and buying puts, price moving lower. All right, let's go back to the Mag 7 signal. Very similar. Call traders definitely driving price. Right now, selling calls. Then they started buying puts a few minutes later, but it looks like really the call buyers, call sellers really driving price. All right, so let's move on. Let's take a look at ARM now. I'm going to zoom in on this. So in the morning, and remember, ARM has been very strong recently, has definitely participated in the semiconductor rally, and it looked like today traders were taking profits. They were selling calls, at least in the morning, up until 9:55. That time should ring a bell. And then they were also buying puts, and then price reversed lower right around 9:55. As traders started buying calls again and selling puts, shown by the rising blue line. So in both cases, especially around after 9:55, orange line, blue line moving the same direction, and price moves higher. Note this sharp drop in the call line here. This is a large block order, large institutional order. Someone selling calls, a large number of calls there. All right, let's go take a look at Bookmap. Let's go to ARM. Actually, let me tone down the volume dots just a little bit. Sharp V reversal just before 10 a.m. Aggressive sellers on the way down. They're exhausted. Aggressive buyers start to come in as traders start to buy calls and sell puts. Price grinds higher. Let's go back to Hero. So essentially at this point, just after 11, the put sellers and the call buyers took their foot off the gas, and now price is consolidating. So strong move higher by options traders, and they take the foot off the gas right around 11. This large block order comes in, and now price is consolidating. All right, so that's ARM. The next one I want to take a look at is CrowdStrike. CrowdStrike has also been very strong after reporting earnings. Today, traders taking profits, selling calls and buying puts. Price breaks below the 380 key gamma strike. Options traders take their foot off the gas right around 10:45 and price consolidates. Let's go take a look at Bookmap. Go to CrowdStrike. Oops. Sharp move higher. And this is typical of many of the price charts today. This is the opening print for CrowdStrike. Huge, huge opening print. So that the way the algorithm for volume dots works in Bookmap, it's all relative. So these volume dots after this opening print are a lot smaller because of that huge opening print. Sharp move lower, break below VWAP, and now consolidation. Note that 380 is the key gamma strike. 380 key gamma strike. Price breaks below that level and VWAP just a few minutes after the cash open. I can zoom in just a bit so we can get more clarity. And I'll have to tone down the volume dots. Bid-ask spread is typically a little bit wide in CrowdStrike here. All right, so there's CrowdStrike, traders taking profits, selling calls and buying puts. Take the foot off the gas, price consolidates. All right, the next is Google. Very bullish day here in Google. Again, note the huge opening print. Large magenta volume dot at the open, and price has been trading higher, making a series of higher lows. Let's see what options traders have been doing. Go to Google. And call buyers definitely driving price higher. That's shown by the rising orange line. Note the flow alert that came in just after the open, indicating significant options activity. That's something to watch for to get your attention. Call buyers coming in. Price moves up to the 180 call wall. And just before price reached that level, options traders, the call buyers, took their foot off the gas, came back in right around 11:35 maybe for another leg higher. And now they're starting to sell calls. All right, so that's Google, driven higher by call buyers today. Again, the opening print kind of obscuring the volume dots. Remember, again, 180 is the call wall. All right, the next, Meta. And today, traders are taking profits in Meta. Meta does have a large amount of gamma expiring today. Traders selling calls. Initially, the put line was pretty flat. Then they started buying puts right around 11:20, something like that. So now the orange line and the blue line are moving the same direction up until about 1:15. Now they've taken the foot off the gas, price consolidating. $500 is the call wall, key gamma strike. And $497.50 is the put wall, hedge wall. Price is broken down below that level. All right, let's go to Bookmap. Go to Meta. Very bearish day here in Meta. Again, a very large opening print. 500 call wall. Key gamma strike. Price broke below that level. Let me bump up the volume dots just a little bit. Let's see if we can get any additional insight from the market pulse price change indicator. What this is showing is price change extremes. It'll take just a minute to load. And this can often be used to time pullback entries, showing this price change extreme. So a pullback entry here, here, shown by this price change extreme, the bright green at the top of this market pulse price change indicator. The pullback entry. Right, so the market pulse price change indicator providing some additional insight for pullback short entries. All right, let's go back to Hero. Bearish day in Meta. Now let's take a look at NVIDIA, the stock that was driving the Mag 7. So again, this reversal that was driving the SB equity signal, the Mag 7 signal, started with NVIDIA right around 1206. All right, so otherwise a pretty mixed signal. Yesterday, the call wall for NVIDIA was at 140, and there was a pretty good rejection at 140. I did post that setup in Discord and Twitter X yesterday. So initially this morning, traders, as we zoom in, we can see that traders initially were buying puts and selling calls, kind of a continuation from yesterday. Price moved down to 124.50, and then traders started buying calls and selling puts, and price has been was grinding higher until that reversal at 1206. So let's go take a look at Bookmap. Go to NVIDIA. Again, a huge opening print, kind of distorting the volume dots. This is very typical of stocks. Heat map showing large limit orders in the order book. In this case, low price, those were limit buy orders. A lot of traders coming in looking to buy at 125. Looks like they were filled. Price reverses higher, and then the buyers come in again at 125. In this case, absorption price did not quite reach that level. Price reverses higher, makes a higher low as traders started taking positive delta positions. And here's the 1206 reversal at the 130 key gamma strike. Buyers are exhausted. Traders start taking negative delta positions. Let me bump up the volume dots just a little bit. Some aggressive sellers start to come in. Price moves down. All right, so that's NVIDIA. Let's go back and check. Hero now. Zoom out. So it looks like some call buyers are starting to come in again. Show me the rising orange line. All right, does anyone have any stocks they want me to take a look at? All right, if anybody has any stocks they want me to take a look at, please let me know and I'll be glad to do that. Ancient the Architect wants to take a look at Microsoft. Sure. So pretty choppy here, Microsoft. Let's take a look at the total signal, see if that gives us any more clarity. Not really. We'll go back to puts and calls. So net for the day, traders are buying calls. Sorry about that. Auto zoom comes in. Go to Microsoft. Let's take a look at Bookmap. Sometimes the hero signal from Microsoft is not as easy to read as some other stocks. So bullish day for Microsoft. Again, very distorted volume dots due to the very large opening print. All right, Kenobi wants to take a look at Hood, Robin Hood. I don't have that in Bookmap. Let's take a look in Hero. And this is one of the stocks that has been on my watch list. So today, traders are buying calls. These numbers are pretty small, but traders are buying calls shown by the rising orange line. Robinhood trading up to the 22 key gamma strike. So call buyers driving price in Robinhood. Started to take their foot off the gas right around noon, and Hood consolidating. All right. Normally, this information that I'm showing can be used primarily for intraday trading, but it can also be used for swing trades or even longer term trades. And let's take a look at one stock that I've been looking at. This is kind of off the radar. VRT. And I was looking to take a long-term position in this stock. So in that case, my entry did not need to be as precise. I was looking for a long entry in VRT. One of the reasons, first of all, I did check the fundamentals in IBD, Investors Business Daily. That was a stock that I was interested in. And let's take a look at something else. Let me take a look at oh, here it is. I've got it. Get over here in the Spotgamma dashboard. Let's go to VRT. And one thing that I was looking at, if you're looking for a long entry, one good area to look for an entry is toward the left end, the lower end of this put call impact chart, where these lines starting to flatten out indicates that market makers are fully hedged at this point, don't have to do any more hedging, and any market maker hedging pressure should be relieved at that point. Also, the put walls at 88. So I was looking for a long entry around this level. So I was combining what I saw, fundamentals in Investors Business Daily, and then looking at the order flow in Bookmap, and also this information in the Spotgamma Equity Hub, all to put together an entry point for a long in VRT. So my entry point was around 87 today. It was an options position. We can really, we can scan through some of this other information in the Equity Hub. So my entry point was not the low of the day, but somewhere around 87. And again, that was below the put wall. Call wall up at 90. Take a look at the history of the key daily levels. No shifts in levels today. Volatility skew indicating there is some call skew. So some demand for calls, but really more put skew, more demand for puts. But really based on this put call impact chart, I thought this was a good entry point for long. So we'll see how it goes. All right, Kenobi wants to take a look at Coinbase. Let's see what options traders have been doing today. All right, so does anyone have any questions about that? I was just talking about how to use Bookmap, Spotgamma, and then the other information that you might have to time an entry point for a swing trade or a longer term trade. All right, Coinbase. The bearish day in Coinbase, traders buying puts, selling calls, price reverses at the 220, just above the 227.50 hedge wall. There was some consolidation around the 225 put wall, and now price is broken below the put wall. So let's go to Bookmap, go to Coinbase. All right, so here's that, let's see back. 227.50 hedge wall, 225 put wall. Here's this 227.50 level. Price reverses around that level. A lot of aggressive sellers coming in, shown by the falling cumulative volume delta, and also the magenta volume dots. And recently I found Coinbase somewhat difficult to trade. This line is the correlation tracker in Bookmap. And this is not working very well. This is showing a correlation to Bitcoin. I'm using Bitcoin futures, and the correlation typically is pretty strong. Not so today. Here in this case, Bitcoin moving up, Coinbase moving lower. Looks like options traders were definitely in charge of price. All right, so Kenobi, there you go. There's Coinbase. So price has broken below the put wall. Trading down, looks like it may be if it kept going down, headed to the 220 area of high liquidity, level of high liquidity. There's the break below 225, put wall, aggressive sellers start to come in, and price breaks below the put wall and VWAP. All right, last call for stocks. And you're welcome, Kenobi. All right, last call for stocks. Let's just take a quick look at the S&P 500. Mean reverting price action consolidation. Very narrow range day to day. Same for the NASDAQ. Moving up. Let's do last check of Hero. Equities. Call buyers coming in, put sellers. Same for Mag 7. More call buyers. All right, everyone, my time is up. I want to thank you very much for watching. Thanks for your questions and comments. Everyone have a great weekend, and we'll see you next week. We'll take a look at how the options levels, the gamma levels, are setting up for next week. All right, everyone, have a great weekend, and I will talk to you later. Bye.